What's going on, guys? Today we're going to be talking about PayPal. We'll take a look at what's expected for earnings next quarter as well as next year. We'll also go over analyst price targets for PayPal. And I want to leave off the video by looking at PayPal's valuation and comparing them to a company like Visa and its valuation, and give a price target of our own of where the stock could be trading a year from now. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, subscribe. Let's start off by taking a look at PayPal's stock chart. We can see that year to date, the stock is down over 15%, and it's had a number of very significant drops. And we can see that its 52-week low is around $50.25, and from there, it's actually had a very nice run over the last couple of months, up around 25%. And even though PayPal's stock price has been falling, they've done a very good job over the last couple of quarters on getting their top and bottom line numbers back on track. And the trend around PayPal's EPS numbers becomes really clear with a chart like this that shows their GAAP EPS over the last 5 years. We can see that in the middle of 2022, they bottomed out around $1.74 of GAAP trailing 12-month EPS. However, since then, they've seen a steady increase over time and then a dramatic jump up when we saw this negative quarter of negative 29 cents fall off. And from there, the GAAP EPS number is sitting around $3.35. We can also take a look at PayPal's quarterly numbers. We can see that over the last 4 quarters, they have brought in EPS anywhere from 70 cents all the way up to 93 cents. And if we look over the last 3 years, these numbers are relatively flat, which honestly, for a company like PayPal that went through a major boom with a lot of people buying things online in 2020 and 2021, it's relatively a good thing that PayPal has been able to maintain these numbers over the last year or so. And when we look at the last 3 years of PayPal's EPS numbers, we can see again that they are relatively flat. However, comparing them to before this large pull forward in demand that we saw in 2020, we could see that numbers for PayPal were anywhere from 39 cents all the way up to 69 cents. And nowadays, a quarter of 69 cents is relatively on the low end for PayPal. They experienced a similar quarter at the end of 2021 where they brought in 68 cents and then a 70-cent quarter in March of 2023. And obviously, that's excluding these 2 quarters where they experienced some buy now, pay later loans that they had to sell off that ended up hitting their earnings. And PayPal's top line revenue numbers look even better than their EPS numbers because of how consistently they are growing. In 2023, they are bringing in around $29.1 billion of trailing 12-month revenue. And if we compare that to the end of 2018, they were bringing in around $15.4 billion. So we have seen their top line numbers nearly double over the last 5 years. And growth has started to slow down over the last couple of years. We could see that they went from double-digit growth numbers down to single-digit growth numbers over the last kind of 2 years. However, keep in mind that over the last year and a half, we have seen companies as good as Meta show negative revenue numbers. So the fact that PayPal has been able to stay positive throughout this whole 2-year period where we've had a lot of concerns with inflation and consumers cutting back on spending, we are still seeing growth and consistent growth from PayPal. And overall, I like that because I think as the economy potentially starts to turn around in 2024, we could start getting back into potentially double-digit growth numbers for PayPal's top line. So for this next quarter, analysts are expecting $1.24 of non-GAAP EPS. Keep in mind the numbers that we looked at in the previous chart were all GAAP EPS numbers. And generally what you'll see is that GAAP EPS numbers will be lower than non-GAAP EPS numbers. So analysts are expecting $1.24. When we compare this to a year ago, they brought in $1.25. So they're really expecting earnings to be flat year over year. And personally, I don't like this year over year change because I don't think it's going to be accurate. What we saw a year ago is the economy slowing down in a major way, a lot of uncertainty around the Fed and where they were going to take interest rates up to. And now we've started to see the Fed really baseline and not raise interest rates. They've held them steady throughout a large portion of this year, and that's caused a little bit more certainty around where things are headed in the future. And even over the last couple of months, we've gotten a lot more clarity around the Fed potentially lowering interest rates in 2024. And we also have seen Black Friday numbers come out, and a lot of companies talk positively about where the consumer is at and how much they spent on that day. So personally, I think PayPal will actually beat this estimate and come in probably closer to the high estimate of around $1.30 of EPS. And for the current year, Yahoo Finance analysts are expecting non-GAAP EPS numbers to come in around around $4.49. And for next fiscal year, they're expecting that to increase to around $5.01 with a low of $3.91 and a high of $5.42. On the GAAP EPS side, I'd like to see them over the next year get back to around this $4 mark. I think that would overall be a very positive thing moving forward for the stock, and investors would get a lot more confident in where the company is headed in the future. And in my opinion, analysts have pretty low price targets over the next year for PayPal. We can see on Barron's, the high price target is $120. They have a low of $52 and an average of $73.99. And on NASDAQ.com, we have more of about the same, a high price target of $118, an average of $74, and a low of $55. And on the Wall Street Journal, they have a high price target of $120, a low of $52, and an average of $73.99. And personally, I think these price targets are relatively low for PayPal, especially the average number of around $74. And really what that comes down to, in my opinion, is valuation. Because right now, PayPal is trading at a forward P/E ratio of 11.11. And PayPal really looks cheap when you start looking at companies like Visa that are trading at a 26.18 forward P/E ratio. And we can see that Visa over the last year has traded anywhere from a 21 all the way up to a 27 forward P/E ratio. And obviously, when you look at Visa and their business model, they have a very strong moat. They have about 50% of the credit card industry, with the other main player being MasterCard. And when you have that strong of a moat, you tend to command a higher valuation. So when we're talking about PayPal, they may not command a valuation that's all the way up to 25, but maybe something around 15 to a 20 PE ratio would be more reasonable for PayPal. And we can run the numbers to see how the price would change if the valuation changed to around a 15 to a 20 forward PE ratio. And if PayPal were to trade up to a 15 PE ratio, that means that the price would go all the way up to $85.06, which would be about a 35% return from the current stock price of $63. And if the valuation were to drive up even higher to around a 20 forward P ratio, we would see the stock price go up to $113.41, which would be an 80% change from the current stock price. Personally, I think somewhere in the middle is what's most realistic. I think a 15 should be easily achievable for PayPal, and a 20 may be slightly out of reach. However, if we do start seeing growth numbers on the top line especially come up, I think 20 could definitely be achievable, and we could even see numbers as high as 25 or 30. Keep in mind that PayPal in the past has traded at PE ratios around 30 before. But my personal price target is somewhere around a forward P ratio of 17, and if we were to see that, that would be around $96.40, which would be about a 53% return from the current stock price. And one thing to keep in mind with all of this is that valuations tend to go up as interest rates drop. A lot of that has to do with the risk-free return that you can no longer achieve at banks. When we start seeing interest rates drop, savings account rates tend to drop as well. And what that means is people are less likely to keep their money in a savings account, and they start to put that money into the market. And really what that does is that drives up prices and drives up valuations. But as I always say, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking at companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.